Okay, that's running. Okay, let's check the stream. What? What are you talking about, bro? My God. Thank you so much. Thank you so much. Thank you so much. Thank you for the heart me. Thank you for the heart me. Interesting. Why? Welcome in. Welcome in. Welcome in. Welcome in. Thank you so much, Jay Bicky. How you doing? Okay, so I'm just coming live. I'm gonna be doing everybody. I'm gonna be doing a breakdown of some stocks. Just lower this volume down a little bit here. Thank you so much, Vicky. You're the best. 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 And let's see how this goes. Let's see how this goes. Good day. Good day. Before I start, Vicky, do you trade? Do you know anything about trading? I do other stuff too. I stream about this stuff, but today, this is what we doing. This is what we doing. This is what we doing today. Okay, get ready here. Thank you. Thank you. Thank you. Thank you. All right. So you're new. Nice. So like this is gonna be like 101. This is like I've been doing it last couple weeks, last couple days, and I haven't gotten it like straight up yet. So today is gonna be like lesson one. So make it quick. I'm not gonna make it long. I'm also recording this and saving this to YouTube, so you can check that YouTube out. If you can follow it, you can watch the rest of this lesson at another time. Watch what you can now, and we will go from there. But this is gonna be Stocks 101, starting up super super simple today. Okay. I've been trading since 2017. I'm a full-time trader in the last 2 years. I've learned a lot about it. I was a past engineer, super successful in engineering, and I've taken what I've learned in engineering and pattern recognition and just really invested a lot of time and effort into the markets. I learned it on a way that I can make it very systematic. I take away a lot of the guessing, a lot of the emotion, a lot of the, because that's the idea. You have to remove the emotion from trading. If you're trading with emotions and I thinks and I thoughts and oh no's, that just means you don't have a really good process in line. Once you have a system in line, you remove the emotions, and then it just becomes like when I see A, B, and C, I know what to do. If it changes, I know when my trade is invalidated, and it just really makes it like the word is systematic. You want to just, hey, when A, B, and C happens, I enter. When A, B, and C happens, I exit. Super simple. And then you know, like, all right, if I do this 100 times, out of the 100 times, let's say I'm correct 30% of the time. Like, okay, so then you can, just have an idea what your win rate is. To give you just some background, real quick, I'll start this off. Anybody who's new. So just to give you an idea, I track everything. Okay, so here's trades I track. This is my morning review where I review a few stocks. I track every one of my trades. I also go into talking about analysis afterwards, the reasons why, and the power behind that is data. So we're not going to start there, but just to give a first overall the stream an idea that it's all about tracking, it's all about systems, and removing the emotion. That's the whole idea. That's the whole premise. Um, and then from there, you can actually become a profitable trader. In the beginning, when I traded, I was not profitable. Yes, I had profitable big days, but then you would have consecutive loss, 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 and then I would remember, like I remember losing a trade and trading more to win back, and so I made all. I think a lot of traders make those first mistakes, and it's really about removing all of that. And I think there's a definite path for a trader, but we'll start from here. So we are going to just start Very, very simple. Very, very simple. Blank screen. And really, trading. What are you trying to trade? You're trying to trade. The biggest thing is path versus direction. Okay? Path versus direction. Because we could all say, I know where a stock is going to go. There's people all the time saying, I think, Bitcoin's going to 1 million, or I think this stock is going to 50. I think this, that's fine. But it's path versus direction. Because the direction is this. So we all say that the stock is going to go up. That's someone saying, hey, Bitcoin's at 60 right now. We think Bitcoin's going to go to 100 grand again, or 200 grand, or 1 million. That's fine. But we don't trade on direction, because direction in stocks actually looks like this. Okay? And if you're just trading in direction, you could be buying at the total wrong point. Okay? So that's the whole idea. This is your path. This is the real direction. This is how price gets to here. Okay? So a lot of people, we don't trade on direction, we trade on path. So that's just removing the whole idea of just like, all right, I'm going to buy because I know it's going to 100K. Okay, well, if you're buying really right here, where the market was at 126, and let's say we're all the way down here now, well, now you're sitting in the deep red. And there's probably reasons not to buy here, and you're just buying thinking we're going to go to 1 million, but that's not the idea. As a trader, or even if you're a long-term investor, even if you're a day trader, even if you're looking to hold for months, even if you're looking to hold for years, the whole idea is you need to understand path and direction, just the idea behind it. Just the idea that there is times to buy no matter what kind of investor you are. There is a time to visually see when to purchase, when to not be in, and when to be out. Okay, it's there, and the idea is to be able to allow you to see that, because the key concept is direction is where price is going, path is how price gets there. Okay, very, very simplistic. The key lesson here is the market is going up, so I buy. That's it. And good traders will ask. Good traders will ask, like, where are we? Right? Where are we inside of this move? Where are we right now? Are we here? Are we about to be here? Did it? Where are we? A good trader will ask, all right, I know we're moving up, but where are we in the system? Because that will allow us to get a better entry and a better idea. Okay, so that brings us. That's just straight, very, very basic. The next very basic thing is that four. There's going to be four. There's four. I'm gonna write them down. There's four, like, what's the word I'm looking for? Like, phases of the market. Only four. The market is doing one of these four things at all times. Okay, and if you could recognize what part of the phases the market is in, it will actually allow you to position yourself correctly. And if you can't know what part of the market is, then you're literally just guessing. Okay, and it's very easy. These are not hard concepts at all. Actually, very, very easy. And if you find yourself being decent at looking at patterns, then you'll realize that these are actually kind of easy to see. The market is only in these four patterns: accumulation, markup, distribution, or markdown. There's nothing else. Okay, it's literally one of these four, and we can go over these in a very, very easy way. This is not a hard concept. This is literally pretty basic 101. Okay, so we know now the path and direction. The market is going somewhere, but how it gets there. Now, how it gets there is the market will be in one of these four phases during that whole moment. Okay, and yeah, we're just gonna start there. I was gonna go into something else, but we'll just drop that. So the phase one, phase one is accumulation. Okay, accumulation is basically after a really large drop. After a market resets, it comes to a moment where the whole market is dipping, 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 boom. First step will be accumulation. Now, what happens here is retail traders. So before I go into this, there's smart money, and we're just going to go, I'm not going to talk about that. Retail traders, which is like the basic person of you and me, think the stock is dead. They see it just drop, they're panicking, they see it's dead, and this is going to be the start of accumulation, okay? Because your average trader is kind of on the sidelines. They're kind of like, I don't know what to do. I don't know what to do. And this is where institutions, okay, smart money concept, institutions, big hedge funds, okay, like that, they start buying in accumulation because they understand where the stock is, where it goes. They don't want to buy in fast big batches because they don't want to push the stock back up. So we have to understand that the as you purchase, the stock goes up, and as you sell, the stock goes down. So they purchase in small amounts to not make the stock fly up. So they, in the accumulation mode, they're picking up little bit, little bit, little bit. Because the idea is they want to get positions filled without pushing price high. You have to understand the psychology of what's going on inside price before you can actually understand price. It's okay. You have to understand the psychology. So what's happening here is the smart money, the institutions start to make positions right now. They are entering because they understand that there was just a huge shift and there was a huge change, and they understand, okay, this is the time where we're going to kind of get people trapped. Okay, so this is where the best trades typically happen. So after a big drop, a big reset, I'll show you what accumulation looks like. But once you start seeing that we entered in accumulation, accumulation is where the best trades will be found. Okay, so like I said, there's four phases, and I just had someone else come in, so I'll just keep it rolling. So that's phase one, and I'll show you what accumulation looks like. I actually have a chart that I made. Stand by. I'm gonna pull it up. Pull it up right here. So this is just help. Okay, we're gonna leave this up here. So your accumulation, and I'm just gonna reference this as we go through. Okay. There's your four markups: your accumulation, your markup, your distribution, your markdown. Okay, without writing it down, I'm just going to leave this screen up and we're just going to talk through it. So accumulation will usually happen after a drop. The market will start to reset. Look at accumulation as like a springboard. Okay, like it's building energy. When a market is in accumulation, it's building energy for the next move. Okay, when it's building energy and we see it change this pattern, we'll go over what these patterns look like at another lesson. But right now, it's just the four phases. Once we start breaking out of accumulation, we'll enter in a markup phase where the market starts to push back up. It's going to have some momentum. You can see the pattern's totally different. This is more like a bounce back sideways pattern, and this is like a stair step. Okay, so we'll get a markup. Now we can have multiple legs. It's not always just one leg. It can be multiple legs up, but it will enter into a markup. That's where the market is start to move. Okay, so if you can identify what stage the market is in. If you're like, oh wow, it was just an accumulation. Now I can see we're in a markup phase. Okay, what's next? The market will never go bullish, meaning moving forward in one direction and then reverse completely into a markdown. It will not do that. The market will never go boom, boom. Okay, will have a moment where when we have a trend, we're going to enter a distribution, which a distribution and an accumulation are are basically, these are all the same patterns, just reversed. But it's the idea is once we accumulate energy, we push up energy, we're going to then hold, like kind of, recover, call it recover because we just spend so much energy and then we break down. Kind of a way to like analogy wise. Like we kind of relax and then we go to sleep. Kind of the idea here. So you want to if you can identify these phases correctly, you then can trade in the correct direction. Okay, and get in and have invalidation points. Now, there's nothing saying that it can't go accumulation, markup, distribution, markup, right? It does not have to go in order one, two, three, four. But the patterns will look like these four patterns. Okay, the four patterns could be in any order as they would like. It could be accumulation, markup, accumulation, markup, accumulation, markup, distribution, markdown, right? It will always be in a set of four into one of these four categories, okay? It will always and forever be. It will always and forever be. So a accumulation, markup, accumulation will kind of look like it's only considered a distribution until we fall. Okay, if this broke to the upside, okay, this would be considered an accumulation. Once it breaks to the downside, now we know we're in distribution. So that tells us what? We're going to be going into a markdown. Okay, so like where it breaks on this next pattern really indicates direction, or it allows us to indicate an idea of where direction is going, right? So once we see a break to the downside, markdown is next. If this, like I said, it broke to the upside, we're going to see some more markup. Okay, so just there's going to be always be those four. Is going to indicate where the market is. More than nothing is definite in trading by any means. No one can say I know where the market is going. No, but we can take as much data from the charts to understand which direction is most probable. And that's the biggest difference. All we need to know is like where is the best chance the market is going to go. Okay? That's what traders are literally doing. They are just trying to guess the best, what take all the information they have and what is showing me where the market is going to absolutely make best chance of where the market is going to move. Okay? So that's what we're doing as a trader. Very, very simple. Now, we can go on to the charts and let's just mark out just like this. I just minimize the photo, it's gone. But just like that photo, okay, just like that photo, I want to leave this open. Okay, just like that photo, we're going to mark these four in a live chart to give you a real idea. I could probably move this to the side. Yeah, move this like this. Get rid of that. Okay. And then we're going to go to like a weekly chart or daily. Yeah. And then we're going to do it live. This is Uber. We don't need to do Uber. Okay. Like we'll, and that's the whole idea. So now you can actually see in live time charts and what they look like with these. Okay. So we're going to draw a box. What do you think this section is right here? This is going to be your accumulation. Okay. Why? Why is that accumulation? Well, hindsight 2020, we know it's accumulation because we can see the break to the upside, right? But this is just so you can identify it. In real life, there's ways to know, but right now we just want to just see like, oh wow, it really is that way. So there's your accumulation. Your next step is what? Your markup. So this will now be your markup. There's your markup. Your next. So look, this is actually a great example because this right here is really would be your accumulation or your distribute, right? But I said if it breaks to the upside, it's considered what? It's considered an accumulation because it's a continuation. So this again would be an accumulation. Okay, like I said, it doesn't have to be in the exact order. The idea is that it's going to be a combination. So then we get another accumulation. Okay. And then we're gonna also, I'm gonna show you something from what is visually you'll be able to see here. There's another little piece of sauce here. There's your accumulation. Now, what do we enter? What do we, it's kind of like, it's kind of hard to see, but this here, we can call this an accumulation. It's rough, but it's an accumulation because it does break to the upside. So it would be just a very smaller. That'd be your accumulation. You get a very small. It's just so you visually start to understand it. You get a little bit of markup. Now, you see how we break to the downside here? What is that? Like I said, once we break to the downside, we know we're in distribution. So now the market's in distribution, right? Distribution. And then what comes right after distribution? Your markdown. So that is a real life example. This is a live time on this stock here. So that is a live interpretation of literally the phases. Perfect example about how it does not need to go in accumulation, markup, distribution, markdown. But we do understand that these are the four and only four phases. And if we can understand what phase the market is in, we can best position ourselves. And again, we have to understand path first direction. Okay, so it's so important how we were talking about. You may know Bitcoin or think Bitcoin is going to go to 200K. Great. That is the direction. Traders don't trade in direction, they trade in path. Okay. And that's this. Okay. Perfect example. Let's say when this is Bitcoin, great. When Bitcoin was at 17,000, you could say, I know Bitcoin's going to 100K, 124K. Sure. But you don't just buy here blindly and just go. No. There's times where if you just bought right here, you bought here, I know Bitcoin's going, and it came all the way down here. Like this is actually like 5 months. So you have 5 months that you just purchased in the wrong phase, right? So if you could identify the phase and you can see a breakout, okay, perfect time, boom, 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 boom. And or if you're holding Bitcoin and you start to see an accumulation breakdown, you know maybe hey this might be a time to collect profits, get out, add to it. Thank you, Jake, appreciate you, bro. And that might be a time where you enter in and out, right? So that's the whole idea. So we got it. So now we literally just found proof. Okay, proof. Morning, bro. Proof of the. Thank you very much for the shares, big dog. Of the four stages. Okay, so this brings us to the next point because this is kind of what this is kind of what's going to let us stand out here. Is the market psychology behind these four phases? Okay, because without understanding the psychology of what's going on, you're not going to even understand what's going on. Okay, because the market is literally a interpretation of psychology. The market is one of the big easiest ways to see psychology throughout the entire, call it economic or world, really, because the whole world is involved in the US markets and trading. You're seeing a reflection of emotions and thoughts and control in the graph. Okay, how people think to certain events. Are people up risk on? Are people risk off? Are people panicking? Are they bullish? That means they have intent in something. They're thinking that this is the next thing. It's literally showing you how people are thinking and feeling. So if you're someone who can relate with the mind and people that can relate with thoughts and people could like want to know more about human psychology, trading will give you a much deeper connection to it, and also you'll be able to understand at a deeper level because you're not looking at it as just price or markets or money moving. You understand that these are people's emotions and people's opinions that are being reflected in price. Okay, so it's very cool to see when you see economic data get released and just how the markets react to it. It's not, none of it's by accident. It moves in a very, very systematic way, and it is random. It is random. It is random because that's thought patterns are random, but there is a science to what's random. There's a reason why it makes these random moves, and once you can or start to identify it, thanks for appreciate you, Jamie. You actually can start to position yourself correctly. Okay, so I think the biggest thing today I wanted to just go over was these two points. Okay. I'm going to be recording these in smaller segments. You can catch it on YouTube. The link's at the top. Okay. Is going to be I'm going to draw the graph one more time, and this is just going to be the main takeaway for today. Okay. This is your path. course. This is your path, and this is your direction. Okay. Traders don't trade on direction, they trade on path. Okay. We may know price is going to go up, right? But we don't just buy because price is going to go up. We identify the path and we position ourselves correctly within the path. Okay, it doesn't matter if you're going to be a day trader. It doesn't matter if you're going to be a long-term yearly investor. You need to identify the stage of the market and you have to identify where to get in. Very, very, it's just that's the name of the game, 101. And it's actually not that, it's like by breaking it down into these charts right here, okay, with just the color coding of the four stages, accumulation, markup, accumulation, well, here, accumulation, markup, distribution, markdown, you know where the market is more than likely going to go next. And that will allow you to grab a position, or even if you're not grabbing a position, if you just want to understand the market on a general outlook, you just want to be able to look at a chart or have a conversation of where the market's going. Once you can break all these lines down into four little patterns, it becomes a little bit more digestible. Like right, when you first looked at this chart, it's probably like, oh, dude, I have no idea where it's going. But once you break it down into these four segments, it's like, all right, that actually kind of makes sense. I can see where it's like, look at accumulation again as building energy. We're building energy. You can see we were building energy here. We pushed up. Building energy, pushed up. Building energy, little we're running out. You can kind of see push up, and it's not as expansive, right? Like you can see that the move wasn't as expansive. What would that indicate? Well, maybe we're running out of energy. So when we run out of energy, we go into a distribution phase. We're like in that like rehab, slowing down phase. And then once we see that break towards the bottom, we're gonna start going down to the markdown phase. This is going to be, we can go anywhere in the chart. This is not a long enough chart, so let's go into, like, this is only Bitcoin's only been around for a while. Like any chart, literally any chart. This is Nasdaq, which just goes up, but it does the same thing. So here we go. Just just a little shorter. It moves a little quicker. So you can see here, market's not making any new highs, right? We'll start right here. All right, you can kind of see that. That would be your what? Your accumulation phase, right? Then we go into a markup phase, right, where the market is actually moving up. That's your markup phase. Easy to see. We can understand that. And then trade sideways, doesn't move. Doesn't move for a while. This is going to be your accumulation again because it breaks to the upside. Okay, now like I said, if this broke to the downside, this would be considered distribution. But because it breaks to the upside, we're in an accumulation. Market goes up into another nice markup. Okay, now a little harder to see. Very short accumulation. Now we know when we're not moving up because price stalls. Okay, price is stalling. Much shorter phase, but we can see that there's distribution. It's not making new highs anymore. It's slowing down. It breaks to the downside. Bro, apologize. Breaks to the downside. It actually comes to about right there. Look, this is a good example actually. Breaks to the downside. That is your markdown phase. Right? Then this is a lot of phases going on. And it's not as hard as it seems because it's not hard. It's really not hard. And what would this be? Accumulation. All right, because we're breaking to the upside. The market will always do one of these three things. It's never gonna be outside of these four things. Will never be. Just won't. Okay? And that's your breakout. It's harder to see it if you're looking for a long-term investment. Maybe look at the NASDAQ because the NASDAQ has been up, 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 for like, historically forever. So it's a harder example, but they are there and they forever will be there. We go into here, a small accumulation phase, into a distribution phase, into a markdown phase, into an expansion phase. This is actually probably, yeah, that was the war. So it will always go into these four phases. Does not matter what we're thinking. Like, let's look at Microsoft. Like, be a little. We'll look at any dang stock. It does not matter. Does not matter. We will always see it. Okay, now you can kind of see it without even me drawing it, right? Accumulation, markup, accumulation, markup, accumulation, a little bit of a markup, and like what would this start to look like? Kind of looks like a distribution, right? We had some accumulation, we marked up, but we broke into the downside, right? So I could tell you Microsoft is downward leaning, and I could tell you it is just also by some other indicators, right? So it will tell you which direction it's going. Let's just do it. So in case you don't see it, I'm not going to change the colors, but you can kind of see this now. Right here's another phase. Mark up and it starts to slow down. Starts to trade sideways. Shows weakness at the bottom first. First sign. Marks up a little bit. Another phase. And it broke to the downside. So what phase are we in now? Markdown. Okay. Literally, once you start identifying these phases on any chart, you can start to realize where the market is going. So if you were going to ask me, where do I think Microsoft is going? I would say we are going down more likely than we're going up. Did I say we're going down? No. I said we are more likely to go down than we are to go up. That's what I'm saying. Because you can see the phase we entered. We're in the markdown phase. Now the markdown phase can end right here and continue. Sure, but we are in the markdown phase. So we know the direction is down until it slows down. Now what we're looking for to end to show us that we're not going down anymore is this. This is a good example. So if price continued kind of doing this, okay, we're in the markdown phase. And it can keep going down for as long as it wants. But then once we start to see something like this, what is happening? Okay, so the markdown phase would be going until here. Look, this is your markdown phase. And then we start to see that sideways pattern, right, where price action kind of starts ping-ponging between the top and bottom. We'll start to identify something like this. Okay, and now we know we're in accumulation or distribution because the market could, it could go this way. And if it did go this way, this would be considered what? Distribution, because it's distribution when we break to the downside. Okay, so if we break to the downside, if we see price come down, start to bounce around and break again, we know that's an indication the market's going even lower. Okay, more likely than not, we're going to see lower. If this bounced around, price came and bounced around and put up to the upside, we know, okay, when it was doing this ping pong action, it actually was building energy to go up. Okay, so then that would let us know, okay, we're probably going to be entering a mark up phase. Okay, it's just a very simplistic way to think about it. Okay, that is perfect example. So that's how you indicate where we're going. You can see right now in Microsoft that we're in a distribution. I mean, we were in a distribution. We are now in a markdown. You don't know where it's going yet because we don't have enough information. We do not have enough information. We see, okay, there's a movement. There's ways, so let me reword that. There's other ways to know where the market is going. But the phase of the market, we know we're in a markdown phase. The phase does not change until we have an accumulation and a change of direction. Okay, now you don't wait, to enter a trade necessarily when on this, but allows you, once you look at the chart, Okay, I know what phase the market is in, and that allows you to be like layer one of making your decision, right? You have to. Your trade is built up on multiple layers of confluence. There's multiple triggers, there's multiple systems. This knowing what phase the market is in is a huge piece because it just gives you a big data point of like, all right, at least I zoomed out. I know where it was going. I know we were trending. I knew we went up. I knew we were trending. This push was a lot less than this. We broke down. Okay, all right, so we had momentum, now we don't. Momentum seems to be on the downside. Okay, is it going to just return to the top? No, because what I do know is we have to build energy before we make another expansive move, right? So I'm not just going to panic in, buy here because, oh no, maybe some news comes out about Google tomorrow, Microsoft tomorrow, and it's just going to skyrocket. No, no. We know we need to build some energy first and then move. It's going to have to, in every big move, we have to build energy first. So from where the graph is currently at in Microsoft, you don't panic. You got time. This is with any chart. You got time. And if you're a long-term investor, okay, this is where you want to start to be interested is in the markdown phase because you want to buy at a lower price. You want to buy at a discount, right? That's the idea of trading: buy low, sell high. So the idea is okay, this might be a point to start looking at the market, but you're not panicking because this very well could accumulate or could distribute and break again, right? And now you may have entered here thinking, oh, I got to get in, and then the market just keeps dropping. Well, now you're in the red 40, 50%, right? So it's layering information. It's this is like layer one. Okay, and then we could dive in and later storms deeper and deeper and deeper. Later storms, later streams, deeper and deeper. But this is going to be your layer one of information. What phase is the market is in? What direction are we going? And how is price going to get there? And once you just that's the basic layer. Okay. I think I'm going to lay it at that. I would enjoy any feedback on today, and especially thank you so much. Um, was it Jay Vicky? I think you're still in here. Thank you, Jay Vicky, for hanging around. I know you've been here the whole time, so I'd like some feedback if you could. Um, I don't want to put too much out there. I think the last time I did this, I did like a 3 hour stream. It was way too much information. I think bite size. I think this is kind of so. Any feedback, even from you, Jamie, from what you've seen, if you're still here, bite size information. And I think the next live I do, we'll just go a little bit more into structure. And yeah, and I think just gives you an idea of being able to see the market from a simplistic way, just a visual, because I'm a visual guy. And for me, if I can break things down into segments, it's easier to learn and it's easier to just adapt. And because I understand, like most people, when I was, didn't know anything about it for sure. Because with all these lines, overstimulation and overwhelming is very, very easy and very quick. So uh, I'm just going to try to break it down as simplistic as possible. Four colors, four modes, and that's it. Hey, Jay, Vicky, welcome back. So you know, and that's it. So Jay, Vicky, what I was hitting up for you before, I was asking from what you've seen if you had any feedback. I was thinking about ending it here after just kind of making it kind of not going too much in one day. Any feedback, and then I'm probably gonna end the stream soon. Jamie, catch me tonight for Hangman. Okay, you left, and yeah, all right. So that's good. Oh, you're still here. I thought you left. Yes. So tonight we'll have some fun tonight. All right, I gotta fix the game. You'll see some fixes tonight. Okay. Well, I appreciate that. This will be saved onto YouTube. Okay, up on there. I have JJ Carter 7 at YouTube. I'm live streaming right now to YouTube also. So this will be saved there. Yeah, Probably gotta like clip all this shit out, but all right. Well, you have a great day, Jamie, and stay tuned for more. Check me out on YouTube. I'll be putting all these and saving all these there. All right. Have a wonderful day, and I'll probably see you later. Thank you. Fucking one. Take care. What's up, bro? Did you call me on another line? Yeah, sounds like you found out. You want to reach out later? My fault. I missed the call.